One of the big trades as we go into the back end of April has been the appreciation of the dollar. Now, fundamentally, there could well be a number of really good reasons to continue this trend. We've got expectations that the Fed's going to act possibly more aggressively than other central banks.
His government needs commitment from BRICS nations that they will neither create any new currency nor support any other currency to replace the US dollar.
Indexes closed lower on Friday after President Trump said he planned to announce more tariffs on many countries next week, and after the release of a mixed jobs report and weak consumer sentiment data. The Dow and S&P 500 each dropped almost 1%, and the Nasdaq tumbled more than 1.33%.
Now, we may or may not, we're going to make that determination probably tonight, on oil. Because they send us oil, we'll see. It depends on what the price is. If the oil is properly priced, if they treat us properly, we'd say down. Look, Mexico and Canada have never been good to us on trade. They're treated us very unfairly on trade. And we will be able to make that up very quickly because we don't need the products that they have. We have all the oil you need.
Last week, February 3rd to 7th, 2025, the Forex market experienced significant volatility primarily due to escalating global trade tensions and divergent monetary policies among major central banks. US dollar, USD. The USD strengthened notably, driven by higher US bond yields, robust economic growth, and a strong stock market. A Reuters poll indicated that nearly one-third of Forex strategists now anticipate the euro will fall to parity or below against the dollar soon, up from one-fifth the previous month. Euro. The euro faced downward pressure against the USD, with expectations of reaching parity due to the dollar's strength. The European Central Bank's relatively dovish stance compared to the Federal Reserve contributed to this trend. British pound, GBP. The pound experienced fluctuations, initially rising due to expectations that US tariffs would impact Europe more than the UK, but later declining against the euro. Investors were cautious ahead of the Bank of England's policy meeting, where a 25 basis point rate cut was anticipated to address trade uncertainties and a slowing economy. Australian dollar, AUD. The AUD dropped to a 5-year low, falling over 2% to US 60.92c, amid fears of a global trade war following US tariffs on imports from Canada, Mexico, and China. Analysts warned of potential further declines if retaliatory tariffs emerged. Global trade tensions. The US imposed significant tariffs, 25% on imports from Mexico and Canada, and 10% on Chinese imports, leading to swift retaliatory measures. This escalation fueled fears of a global trade war, causing declines in major stock indices and increased market volatility. Central bank policies. While the U.S. Federal Reserve paused its rate cuts due to strong economic performance, central banks in Europe, Canada, India, and Mexico continued to reduce rates to stimulate their economies. This divergence in monetary policies contributed to the strengthening of the USD against other currencies. Overall, the Forex market was heavily influenced by geopolitical developments and varying central bank strategies, leading to significant currency movements throughout the week.
Benefit from this war continuing. They would like the Russians to have a ceasefire. It is undermining China's relationship with Europe, which especially the frontline states, which they would like to be more stable. It is making it harder for the Chinese to have flexibility globally. They really don't like the Russia-North Korea relationship. They want this war over. As you said before, Chinese need stability. The Russians are chaos actors. So they're not fully aligned in this. If I were Trump, I would absolutely...
And it's not just on our phones. China is becoming dominant in many other areas of tech. Look at cars. It's overtaken the previous epicenters of motoring, selling more than any other country.
Based on last week's Forex market trends and key geopolitical developments, here's what to expect for the upcoming week, February 10th to 14th, 2025.
Now, we may or may not, we're going to make that determination probably tonight, on oil. Because they send us oil, we'll see. It depends on what the price is.
US dollar, USD, Outlook, strength continues, but pullback possible. The US dollar is poised to maintain its strength as high bond yields and diverging monetary policies continue to support the greenback. However, potential profit-taking and Federal Reserve interventions could trigger a temporary pullback. All eyes will be on the U.S. Consumer Price Index, CPI, report on February 13th, a key event that could shape the dollar's trajectory. A higher-than-expected inflation reading would reinforce the Fed's hawkish stance, providing further support for the USD, while a weaker figure could lead to a short-term decline. Euro under pressure as parity fears grow. The euro continues to face downward pressure amid sluggish European growth and diverging monetary policies. With the US dollar strengthening, a higher-than-expected U.S. inflation report could push euro to US dollar below the 1.05 level, bringing parity into focus. Market attention will also be on upcoming speeches from European Central Bank policymakers, as any signals of a more hawkish stance could offer temporary support for the euro. British pound, GBP, faces volatility amid rate cut uncertainty. The British pound remains volatile as uncertainty lingers over the Bank of England's expected rate cut in the second quarter. While markets anticipate easing, the timing and scale of the move remain unclear. GBP is likely to see fluctuations, particularly against the euro, as investors assess economic data. The key focus will be on the UK GDP report due on February 12. Weak growth figures could reinforce expectations of a rate cut, putting further pressure on the pound. Australian dollar, AUD, slides as trade tensions weigh on sentiment. The Australian dollar extended its decline last week as escalating trade tensions and a broader risk-off sentiment pressured the currency. Further downside remains likely if market fears persist over U.S. tariffs and potential retaliation from China. Investors will closely watch Australia's unemployment data on February 14th, as a weaker-than-expected report could add to selling pressure and push Australian dollar to US dollar even lower. Geopolitical risks loom as trade war and Middle East tensions escalate. Rising geopolitical uncertainties continue to shape market sentiment, with investors closely monitoring trade tensions and developments in the Middle East. If China retaliates against the latest U.S. tariffs, risk appetite could deteriorate further, driving safe haven currencies like the US dollar and Japanese yen higher. Meanwhile, any escalation in Middle East conflicts, particularly in key oil-producing regions, could push oil prices higher. This may bolster commodity-linked currencies such as the Canadian dollar and Norwegian krone while weighing on risk-sensitive currencies like the Australian and New Zealand dollars. Forex market strategy, USD strength and geopolitical uncertainty in focus. Traders are positioning for continued US dollar strength, with opportunities to buy the greenback against weaker currencies such as the euro, British pound, and Australian dollar. The euro remains under pressure, making selling rallies a key strategy, particularly if the European Central Bank maintains a dovish stance. Meanwhile, geopolitical uncertainties could drive demand for safe haven assets like the Japanese yen and Swiss franc, especially if market risk sentiment deteriorates further.